Hello and welcome back to Investing Alchemist. Today, we are going to unravel the mystery of Nifty and Sensex. Let's start at the very beginning. Nifty and Sensex are terms that you've likely heard countless times if you've been even remotely involved with financial news, whether that's watching CNBC, browsing financial websites, or even in casual conversations. But what exactly are Nifty and Sensex? These terms are often thrown around without much explanation. We'll clarify these concepts in this episode. Nifty is short for the Nifty 50 or National Stock Exchange 50, while Sensex is short for the Sensitive Index. These are like report cards for the stock market, telling us how it's doing. We already learned about the two major stock exchanges in India, the National Stock Exchange, NSE, and the Bombay Stock Exchange, BSE. First, the NSE. It began its journey in 1992, and it has grown to become one of India's primary stock exchanges. BSE, on the other hand, is an elder statesman dating back to 1875. It's one of the oldest stock exchanges in Asia. NSE is newer, and it currently has around 2,000 companies listed. In contrast, BSE, with its long history, has 5,000 companies listed. Why the difference in the number of companies listed? It all comes down to history. In the early days, many companies were listed only on the BSE. But as time progressed, companies started listing on both NSE and BSE. Now, here's a critical concept: what is an index? At its core, an index is merely a number that measures or indicates something. Think of it as a yardstick to gauge the performance of a particular set of things. It's like the average you might calculate for a series of numbers. It simplifies complex data into a single, manageable number that gives you a clear picture. So, why do we need indices in the stock market? Well, the economy and the stock market share a strong connection. If the economy is doing well, the stock market usually rises. When the economy struggles, the stock market tends to fall. To understand how a country's economy is performing, one of the measures is to check the stock market's performance. And you guessed it, that's where indices like Nifty and Sensex come in. Now, let's understand Nifty and Sensex. Nifty 50 is the index of NSE. Sensex is the index of BSE. Nifty 50 contains top 50 companies on the NSE. Sensex contains top 30 companies on the BSE. When you hear that Nifty 50 is up by 2% today, it means that these 50 big companies, on average, are doing well in the market. Okay, you might be wondering, how do they calculate these indices? We won't dive into the nitty-gritty of the calculations in this episode. But let me give you a simplified idea. Both Nifty and Sensex use a market capitalization or free-float market capitalization methodology. Market cap is the total value of a company's shares in the market. But the stock market isn't just one big thing. It's made of different parts like IT, banking, and more. To get a better understanding of how different sectors are performing, we have what are called sectoral indices. These indices focus specifically on companies within a particular sector. Sectoral indices like Nifty IT help us know how these specific areas are doing. If Nifty IT is up 3%, it means IT companies are doing well. Indices like Nifty and Sensex play a crucial role in the world of investment. When you invest in the stock market, you often aim to beat these indices. Let me explain. If Nifty 50 has gained 10% this year, and your investment portfolio has gained 12%, you've outperformed the market. That's a good thing. On the other hand, if Nifty 50 has gained 10%, but your portfolio has only gained 8%, you've underperformed the market. That's a signal that you might want to reconsider your investment strategy. Indices like Nifty and Sensex act as a benchmark, a standard to compare your investment performance against. They're the yardsticks against which investors measure their success. That wraps up today's journey into understanding Nifty and Sensex better, the vital stock market indices of India. Knowing these indices can be a game-changer in your investment decisions. Please don't forget to give this video a thumbs up. Subscribe for more insightful content. Thanks for joining us, and remember, knowledge is the key to successful investing.